Welcome to the How Did They Do It Real Estate Podcast. Have you ever wondered how people succeed in real estate and what steps they took to get there? If so, this podcast is for you. Your hosts, Sayla and Eileen Prack, interview top experts in the real estate community to share with you their real estate journey and how they achieved massive success. Our goal is to provide you with valuable real estate resources and to help you apply it to your own real estate goal. Welcome to today's episode of the How Did They Do It Real Estate Podcast. I'm your host, Eileen Prack, and today our guest is Alfredo Riascos, and he is the principal and broker of Gridline Properties, which he founded back in 2018. He has more than 16 years of brokerage experience, and prior to founding Gridline Properties, he worked at Metro One Commercial, where he developed a 10-year career in the brokerage industry. He's also a South Florida Business and Wealth 2022 up-and-comer honoree. Alfredo, welcome to the show. How are you doing today?
Hi, Eileen. Thank you for having me on the show. I'm excited to be here. I'm excited to join you guys. And all is well. Thank you for having me.
All has to be well with the beautiful weather that you're having out in Miami.
Yes. I hate to brag, but it's 77 degrees outside, not a cloud in the sky, no humidity. It's good to be in South Florida today, fortunately.
So, Alfredo, can you share a little bit more about your background and how you got started with real estate?
Yes, I got started in real estate at a young age. I got started when I was 19. This was back in 2007. It was almost by complete accident. I was looking to engage in some sort of internship during the summer in between semesters. And I went on Craigslist. Back then, Craigslist was kind of like our go-to authority for finding any sort of gig or job posting. And I landed on a very random job posting that entailed developers seeking young apprentice internship program for the summer, opportunity to learn, earn income. And it almost sounded too good to be true, but I gave it a shot. I gave them a call and they suggested that I come the next day for an interview. Growing up and, throughout my high school years, I never really envisioned getting into real estate. So the ad kind of caught me by surprise because real estate was not really on my radar whatsoever. I always wanted to be, growing up, some sort of like fancy Wall Street finance banker, Gordon Gekko type, slick back hair. So real estate was not something that I really thought about, but the ad caught my attention and I took the interview and I landed the job. The job consisted of being pretty much the assistant to a property manager that owned about 350 residential multifamily units in South Beach. And the job entailed everything from helping out with maintenance requests, to evicting tenants, to coordinating inbound tenants that were moving in. Anything that required an extra hand, I was there. So I was in a very privileged position to really learn and absorb from various different disciplines within the real estate industry. And eventually what I did after a couple of weeks being there and being exposed to the maintenance side, to the management side, to the leasing side, I really took to the leasing side of the business. I found out that it came natural to me to meet a tenant, show them a unit, have a conversation with them, go through the sales process, look at them in the eye, negotiate a potential transaction, put together a lease, get them to provide funding, security deposit first month, and finally closing on a transaction, which back then, I was renting out these units for like $500 or $600 a month. They were 12-month leases, very small deals, but the part of the deal really, really impacted me. I was hooked. Being able to engage with somebody that I met 20 minutes before and to be able to transact with them. And my whole pay structure was, I believe it was $8 an hour plus $100 for every unit that I leased. And the majority of my pay all of a sudden started coming from units that I was leasing. And it came natural to me and I enjoyed it. I enjoyed meeting people. I enjoyed the transactional aspect of it. And it hooked me. And from then on, it just continued developing. And eventually I realized that I wanted to get into the commercial side of the business. And that's how I got started in real estate, and, in a very quick and summarized version of it.
So when you got into the commercial side of things, that's where you started your brokerage, was initially in the commercial side of the business and real estate.
Right. So the way that it really took place is I spent that entire summer working for that gentleman. The good news is that it got me into real estate. It provided me with exposure, and more importantly, it taught me the act of the transaction, consummating a transaction. And that's what really hooked me. The bad part of it, or the bad news, was that my employer then turned out not to be such a good guy. And all of a sudden, the $100 per unit that I was renting, the payments stopped coming, excuses started being made, and basically I started being jeopardized because of the success. So all of a sudden I was doing like 13 leases per week, and he thought that that was too much. So unfortunately I had to leave because the platform was not working for me anymore, or the employer was not really being fair with me. I was 19 years old. I didn't have much experience, but I said, you know what? I don't deserve being in this environment, which was the bad part about it. But then it really got me into thinking about real estate and thinking about the next step forward. So I started my college semester and I started looking for other opportunities. And I went back to Craigslist, saw another ad related to real estate, and this one was specific to commercial real estate. And I really had no idea about commercial real estate, but I took the interview. I met with the office manager at a newly formed company in Miami's urban core. It was a new business, but there was an air of youth, of innovation, there was a different type of feel from your average brokerage. And again, I sat down with her and she kind of told me what their vision was and what they were doing. And she was a very convincing and good saleswoman. And I said, you know what, where do I sign up? I like the idea of going into this. So I started right away, and I ended up spending almost 11 years at that company. So that's really how I got into brokerage. Spent 11 years there. They were very successful 11 years. I left on very good terms, and I left in 2018 to start my own brokerage, Gridline Properties. And that's really how it all kind of came about.
So fast forwarding to where you are today in the market and with real estate in the commercial space, with all the interest rates rising, the talks of the SVB banking and that whole side of things, everything is just kind of moving around right now. Where do you see the commercial side of real estate? What is the state of the environment right now from your perspective?
Right. So that's been the subject of conversation for the last 5 days, most particular to SVB, Silicon Valley Bank. But before we get into that, I mean, one of the realities is getting into the real estate market, there's always going to be something, Aileen. There's always going to be, whether it's the pandemic or the financial crisis or interest rates or oversupply, vacancy, the market's always going to have these cycles that are going to bring challenges to the marketplace. That is always going to be present, right? In today's world, we're looking at the following hurdles. A, interest rates going up over the course of the last 6 to 9 months. And B, most recently, the collapse of SVB, and obviously a dark cloud over the financing world, right? So as real estate professionals, we really need to digest that information and figure out how it's going to impact us over the long term or short to medium term, right? And I think that over the long term, you can't really get too concerned, right? People that go into real estate and are looking at it from a short-term perspective are probably not going to fare off too well, because this is a long-term game. And in order to really be successful, you have to be patient, and you have to realize that things in real estate take time. So yes, we are in the middle of a very challenging capital markets climate. I think that through the collapse of SVB, lenders are going to be a lot more disciplined in their underwriting process. I think access to capital is going to shrink. So the ability for there to be liquidity in the marketplace is now being reduced, right? And what does that mean? There's going to be fewer buyers. If there's fewer buyers, it's going to create downwards pressure on certain markets. Now, certain cities, certain neighborhoods, certain states are going to react very differently to that. Fortunately, we're here in South Florida, and South Florida for the last 2 years has been an extremely healthy marketplace. And even though access to the financial markets is a huge component of the buyer pool. There's so much liquidity in this specific market that a lot of buyers are now taking advantage and approaching sellers and saying, well, look, all of a sudden there's not that many financeable individuals that we're competing against. So we're willing to go into this transaction and pay cash with no financing contingencies. And yes, we'll require for some sort of price consideration, given the fact that there's no contingencies with our offer. But I am not seeing substantial changes in price points yet. And that's based on the last 6 months. The SVB collapse was less than 2 weeks ago. So I think that the market is still digesting that. But at least speaking for my marketplace, which is predominantly South Florida, Miami urban core, there's so much liquidity. The market is so healthy from a tenant standpoint. There's a lot of tenant demand that I don't really see much of a price shift. But these are all things that we have to monitor day in, week out, month out to really see how things shake out in the next probably 6 months.
Are you seeing, especially when the interest rates started rising, several months ago, it seemed like there was a large gap between sellers' expectations versus buyers' expectations. And now that the interest rates are still in flux, they're not going up as quickly as they were several months ago, but they're still moving around right now. And with the collapse of the SVB and some other talks about regulations and things like that, are you seeing any more closing of the gap between the two different expectations? And will that continue to go forward as we get further along in the year?
Yes, I started to see the closing of the gap in the last couple of months, right? Because, another thing with real estate, it's not like the stock market where there's a consequence and there's an immediate reaction, right? The stock market trades day in, day out, and you see immediate changes and shifts in that marketplace. The real estate market is like a slow moving ship. If you move a rudder, it's going to take time for that rudder to do what it's intended to do, and that ship will eventually shift. So we started to see the rise in interest rates probably towards the middle of last year, and we didn't really see the market digest those changes until probably late into the year. So anything that happens today, Eileen, I'm looking at the consequences probably 90 to 180 days out, right? So as it relates to SVB, it's still a little too early to tell. What we know is that lenders are going to be stricter moving forward, given the dynamics with SVB and some of the other smaller banks, but it hasn't really been applied to the street yet. So there are things that we need to recognize immediately, but we won't really see play out for next couple of months, probably.
Especially in the current environment of the state that we are in today, deals are a little bit harder to come by because of the different expectations and the gaps and some more conservatism and underwriting tweaks that people have been doing on the buying side of the business. What does it take in this market now to win a deal, and what's important to the buyers now, and what's also important to the sellers that eventually allows them to close on a deal and win deals?
Right. So that's a very good question, right? Because it's not always about price, right? Everybody points to price, but there's also many different parts that are moving in a transaction. And one of the ones that I've really been impacted by is velocity to do transactions. When there was capital flooding the markets from lenders and investors and everybody under the sun, deals were consummated in very, very short time periods, meaning short due diligence, short financing contingencies, and short closings thereafter. Now, as the capital markets become more challenging and harder to come by, buyers are going to expect longer timelines. They're going to sit down with the seller and say, hey, Mr. Seller, we're going to need to adjust the pricing a little bit because our costs to transact are now higher due to interest rates. But on top of that, we need to be very diligent as buyers, and we need to make sure that lenders give us a full commitment before we make a non-refundable deposit commitment to the transaction. And lenders are going to be a little stricter. They're going to be more disciplined on appraisals. They're going to be more disciplined on reviewing each individual transaction with the lender's committee. these things are going to take more time. So a lender a year ago could probably transact it in less than 60 days. Today, I don't see any lender transacting in less than 90 days. So naturally, that pushes timelines. That has an impact on buyers. That has an impact on sellers. That has an impact on brokers. Everybody's affected by those longer timelines. And it's just, it's a function of the marketplace, right? And the inverse of that is, like I was mentioning, a cash buyer coming to the table and telling the seller, hey, Mr. Seller, I don't need a lender. I'm going to close all cash. I'll waive all contingencies. But in exchange for that, because I'm a luxury in the marketplace, I'm a non-contingency buyer, I want a 5%, 10%, maybe even 15% discount off the price point. And at that point, you're faced off against the seller that will need to determine if terms are better than price, right? And those are decisions that sellers will make on a case-by-case basis. But at least in the case of South Florida, I'm not really seeing any distress on the seller side. So for the most part, sellers would rather wait for their price and give terms than give discounts and get faster velocity. At least that's what I'm seeing in my marketplace.
What are some of the terms that you've seen that really have stood out on the different transactions?
Due diligence. And as a broker, due diligence is the one thing that we really try to compress the most. That's where there's no commitment really to the transaction. And it's not until there's a non-refundable deposit that we really count on that buyer transacting on the purchase. So a year ago, I was seeing due diligence very, very quickly. I was seeing less than 30 days, 21-day due diligence, in some cases even 15-day due diligence for transactions in top-tier markets. Now, I'm not really seeing anything under 30 days, but the average on most of them has become 45 days. And on transactions that are a little larger and a little bit more complex, buyers are going to need 60 days, and then they might need a 30-day financing contingency on top of those 60 days. So everything is delayed and everything requires a lot more work. Buyers are going to have to go through a couple of different lenders before they get their term sheet. Raising equity is also a little harder nowadays as well. Investors are going to be a lot more disciplined as well. So it really varies. And it also varies by asset class. At least in South Florida, where I am seeing a real slowdown is on multifamily development. 2 years ago, every developer under the sun wanted to get off the ground and build multifamily because there was such an influx of new population coming in. But fast forward 2 years later, construction costs are still high, interest rates are higher, there's a lot more supply. So not only are lenders going to be stricter, but the investor pool has also become a lot more considerate of the economic environment.
Do you think that now is still an opportune time for new investors to get into the space? And are you seeing some seasoned investors maybe starting to drop out of the space?
I never see a seasoned investor drop out completely. Seasoned investors are always in the market. Whether they're closing deals, that's a different question, right? But they're at least always looking at opportunities. And I think that you have to look at everything through the current lens, right? You have to, when you look at an opportunity as an investor, you have to understand, all right, what's pricing? Where are my rents and what are my costs to do business, right? And if you're looking at those three functions, you're going to do well in any market, in down markets or up markets, right? So maybe you're doing a lot more deals in markets where there's favorable terms to the buyer, but those markets are very narrow and the windows are small. So as an investor, you always have to be out on the streets. You always have to be looking at deals. And we've seen some really good opportunities come by our desk in the last 6 months. And those opportunities, the window is very, very narrow, where we have small instances where a seller calls us and says, hey, I've been under contract with a buyer for 90 days. They dragged me through the mud. They weren't able to get their financing, kind of ready to move on, Alfredo. You can bring me a buyer with a clean contract, not a lot of contingencies. I might take that haircut for the right buyer, right? So that's when the seasoned investor comes in and he could grant the seller the security that they're going to close. So as an investor, as somebody that does this day in, day out, you have to keep your ear to the ground at all times, especially in times like today, where there's a lot of noise in the market. There's uncertainty. There's people pointing in different directions. Sometimes you don't know which way's up, down. You have to really stay focused, and you have to be very lucid in your approach.
And when working with when looking to get into a new market and trying to build up those relationships, what are some of the things that stands out to you as a broker when people put in offers or sellers want to work with you? What are some of the traits and characteristics that you look for that makes you say, hey, I want to work with this person. I want to make this deal work and see how we can partner up?
That's an excellent question. I think that brokers, especially experienced brokers, act as the front line or the buffer between new buyers and sellers, right? Because brokers don't get paid by the hour. So we also want to make sure that our time is not being spent on buyers that don't have the capacity to take things to the finish line. So as it relates to myself and my team of 12 agents, for the last 3 months, we've been very, very diligent in really qualifying potential buyers, right? And when we meet buyers, and especially if it's new faces, we want to ask them all the right questions. What are those questions? Hey, what asset class are you looking to invest in? Okay, you're looking to invest in industrial, office, or multifamily. Do you currently own any assets? If so, where are your assets? What's your average deal size? Where is your capital coming from? Are you syndicating your equity, or is this your own equity? If you are syndicating, have you already secured potential investors, or you have to go to market once you have the deal under contract? Are you going to finance a transaction or not finance that transaction? If you are financing, who's your lender? I want to meet your lender. Have you obtained some sort of term sheet from your lender? So we really, really want to ask all those tough questions. And in some cases, it's uncomfortable because you just met somebody, you're trying to do business with them. Most of the time, they seem like fair and good individuals. So it's a little uncomfortable sometimes to come at them so hard. But in this market, you have to do your homework, and especially us who represent sellers for the most part. There's no worse feeling when we put our name in front of a potential buyer and then you go under contract and it turns out to be a huge waste of time. So I'm really strict in trying to avoid that and really qualifying buyers before we start a transaction process.
So what's next for you, Alfredo? What's your next focus?
I'm very excited. I'm really excited about South Florida. I think South Florida has tremendous growth potential. We've seen a lot of that throughout the last 2 years. And my main focus right now is to continue to grow my team. As I mentioned, we're 12 agents. And one of the things that I'm most thankful of is my team, because my team allows us to grow our platform, continue growing our flag, and gaining more and more market share. So as it relates to the next steps, we've been predominantly urban core based in Miami, Florida, but I want to start sinking deeper into other submarkets. Broward market, which is the Fort Lauderdale, Hollywood area. I think that's a tremendous area to look into. Palm Beach is also incredibly exciting. And then there's the west coast of Florida. There's Fort Myers, there's St. Petersburg, there's Tampa, all areas that with the right team members and the right expansion plans, in my opinion, are very attractive new frontiers for Gridline Properties.
And how has real estate impacted your life so far?
You should ask that to my wife. Real estate, as cheesy as it sounds, consumes pretty much my everyday life. I really enjoy what I do. I love being in real estate. I talk about real estate with all my friends. Most of my friends are in the real estate business. So since I've been in this for 16 years now, when I go to lunch with people, we're talking about real estate. When I travel with my wife and we're in a new city, I'm looking at buildings. I'm trying to understand the connection between retail and office and how certain streets speak to one another. So it's really consumed my everyday life, and I really enjoy it. And what's most appealing to me from a real estate perspective is that real estate is limitless. Whether you're a real estate attorney, a real estate broker, a real estate investor, the possibilities are endless, right? You really make of it what you wish, and through hard work and dedication, you could take it as far as you really want to. So that is what really drives me. That's the fuel that I keep reminding myself of. And it's an industry that's always evolving. There's always a new trend. There's always a new innovation. So it's a constant effort to try to be ahead of the curve and continue growing and evolving. And I'm always learning. And I really love that part of it. It's great to learn and seek new opportunities every single day.
And what is the one thing that you know now about real estate that you wish you knew when you first started?
That's a hard question. I think that it's probably to acknowledge that good things take time, and you need to water those seeds, and you water those seeds, eventually they start to sprout and grow into bigger things. Early on, I was a young kid. I was very aggressive. I wanted to grow so quickly that maybe I think I could have slowed down a little bit and looked at the bigger picture. It turned out all right for me, but I think patience was an important one, realizing that good things take time to materialize. And, most importantly, I think that I could have probably gotten into other markets early on. And look, nobody has a crystal ball, right? There's been some sub-markets around me that I wish I would have said, oh my God, I was there before everyone, right? But sometimes it's difficult to predict that when you're day in, day out working on other things. But for the most part, it's turned out all right. And again, I'm always learning and I'm always trying new things. So here we are.
And what is the one thing that sets the successful people apart in real estate?
I think it's really values. Real estate, as I mentioned a few times already with you, Eileen, it's a long-term game. It's not a sprint, it's a marathon. And especially in Miami, which is this like boom and bust town, there's a lot of people that are looking to take shortcuts for a quick dollar. I think that's the worst thing you can do in this business. It's a relationship business. So if you do right by somebody, I don't care if they're the smallest tenant or the largest developer or investor, if you do right by them, they're going to want to work with you again. And people in this business, it's a very small circle, and your reputation is incredibly paramount to your business. So if you do right by people, if you're a trusted person in the community, if people value your integrity and your hard work, it's going to reward you tenfold. I think that's one of the most important things in this business.
And Alfredo, where can our listeners find out more about you and what you're doing?
Absolutely. You should check us out at our website, gridlineproperties.com, or on Instagram, Gridline Properties. On LinkedIn as well. You can find me on LinkedIn, Alfredo Riascos, or our page, Gridline Properties.
Awesome. Alfredo, thank you so much for your time today.
Absolutely. I'm very happy to be here, and thank you so much for your time and for the invitation.
Thank you. It was my pleasure.
And thank you for listening to our podcast today, brought to you by Bonavest Capital. We would really appreciate it if you can go to iTunes right now and leave a rating and written review. Also, please don't forget to subscribe so you can always get the latest episodes. You can also connect with us on Facebook, How Did They Do It Real Estate. We'd love to hear your feedback and any topics that you're interested in for future episodes. Lastly, to learn more about us, you can go to bonavestcapital.com and fill out the Contact Us page so you can speak to us directly. Nothing on the show should be considered as specific personal advice. Please consult your legal, tax, and real estate professionals for individualized advice.